All right. So let me kind of back up for a second and go over why POS are good. Why is it good to receive POS in your lead pack? Well, first of all, it's a privilege to receive POS because they're basically saying, hey, here's our clients. Here are people who are paying us already. Don't screw it up. Make sure they keep paying us, right? So it's a privilege to receive them because you're being trusted with clients who are already paying, right? Um, and the good thing about POS is that these people already have trust in our company. So you're not going to have to deal with people thinking it's a scam or, trying to overcome all these hurdles and obstacles in the beginning. Okay. Now, don't get me wrong. You still need to build up the company. You still need to remind them why we're great and why they chose us in the first place. But you're not going to have to deal with all those headaches of people hanging up on you and, no showing you as much. The show ratio is a little bit higher. So you also know that they have a bank account because if they're already making payments to American Income, you're not going to run into problems with people not having a bank account. It's a little bit easier to set appointments because people want to know where their money's going, how much cash value is built up, and also they want to update their claim forms. Okay, those are the three things that I say in the first paragraph in my phone script. Is I'll say, it's I'm calling to schedule a review on your policy so that way you know where your money's going, how much cash value that you have built up, and also to update your claim forms. Then I say, do you remember that freedom of choice certificate? Okay, I'll get more into phones a little bit later. But that's why it's easier to set an appointment. Also, like I said, a higher show ratio. Typically, it's better retention as well. Because when you increase somebody's policy, people don't really think about their life insurance policies as being like 2 or 3 different policies. They think about it as being one whole policy. So when you increase their policy, even though you know technically what's going on, we're actually adding another policy to it. And you can tell, you should tell the client that too. They still think about it as one whole policy. So they're not going to cancel this thing that they've had for 10 years. Okay. They're not thinking that it's all separate policies. So the reason the retention is higher is because even though you're upgrading it, it's still like part of their policy they've had for 10 years. And they're not going to get rid of something they've had for 10 years. Okay. It's very easy to increase people's freedom of choice certificates when you use inflation. I'll talk about that a little bit later and how to do that. Term conversions, you'll run into people who have term with our company, and you can convert that with no medical questions up until the entire face amount. If you increase, if you're converting more than the term, you have to ask medical questions. Okay. Also, for term conversions, if you're not increasing the coverage, you won't need to get an oral swab or anything like that, as long as they had the policy after 2001. If they took a swab for their original policy, when they have a term policy, when you convert it into whole life, you don't need to do another swab. So they could have picked up smoking habit in between now and when they got their policy, then and you still be able to give them non-smoker rates if that's what they had originally. And the mindset is that you're still collecting referrals and you're using my suggestion is to use your favorite no cost benefits that you like collecting referrals off of. Focus on that to get referrals, but also focus on contingent beneficiaries. Focus on contingent beneficiaries. And you may have remembered this term when you went to pass your test. It's called tertiary. Okay, one of the goofiest words you had to learn, tertiary. Okay, but it means the third beneficiary. And if I use a word like that that's totally abstract and the client's not going to know what it means, I still use the word. I'll say, and then who would be your tertiary beneficiary, Joe? That would be your third beneficiary. Okay. You always want to. One of my favorite things to do is say, so what that means, Joe? Those words right there. So what that means. So I hit them with something that confuses them, right? use some technical terms, but always follow up with, so what that means, and then explain it in layman's terms. So I have a bunch of these different like transition phrases that I use. If I ever feel like I'm confusing them, I'll just transition straight into that phrase of, so what that means. And then that buys me a little bit of time to like figure out how to dumb it down so they understand it. So you can like impress them, but then immediately explain it so they can understand it. So I went off on a little tangent there, but what I was trying to say is that we're going to go over no cost stuff, but we're really here to talk about insurance. Okay, we're not wasting a ton of time going through all the details of every little bit of the no cost, right? We're focused on a couple main referral sources, which would be the whatever your favorite no cost is, maybe child safe, and then contingents, tertiaries, and even a fourth beneficiary if you want to. Okay. And then another thing is you got to have a lot of product knowledge in order to be successful with policyholders, because the first person that went there to sign them up might have done just the two job. They didn't really explain life insurance to them. Okay, but now you're going to come in as the expert. You're going to show up as the expert. Okay, in order to sound like the expert, you have to be knowledgeable. So you got to have a lot of product knowledge, both our products and other companies. One of the best places to go to get product knowledge on our products. Who's got the answer?
Rapport.
Rapport, baby.
Hey, real quick, man. These are the best leads that we got. I don't think you guys know what's going on right now. You know, like Tommy, if you want to write a shit ton of business, POS is the way to go. And I'm not just going to give those out to people that don't know what they're doing with them, because you literally should sell every single one of them something, at least. You understand what I'm talking about? I'm going to give you leads that when you call them, they book with you, and when you book with them, they sit with you, and you sit with them, they sell. All of them. I will not accept nothing less than 100% when I have POS in my hands. 100%. I don't expect or accept anything else. Like if I sit down with 18 people, I will sell all 18 people something. Something. That's what we're dealing with right now. I want everybody next month to blow it up. This is it. This is it. The year's going to be over, right? So we're taking all of our POS and we're putting into your hands. So every word that comes out of his mouth and every word that Gio did in his POS workshop and every one that I did, you guys need to know that shit verbatim before you touch one of these things. Or else you're going to be misfiring and you'll be scoring 50s when you should be scoring 100% on your POS, 100%. That's what we sell over here. That's how we roll. Like, you got to know how to reduce them down and at least add some damn ADB. Everybody's getting something. You know what I'm talking about? So make sure you're writing notes and taking notes on this stuff. You know what I mean? Pay good attention to this, okay? I just want to make us aware of how awesome and how special this is going to be. You know,
a really good line to use if you're like almost as like a last resort kind of thing, to at least get them something, is to say, you know, Joe, the program you have to protect your family is pretty good. I mean, it's almost great. There's just a few small things we need to do to make it great. Okay, but you did get started in the right direction. So here's what we need to do to make it great. Okay, so at least add ADB, at least do this. They might have 100,000 of ADB, but you can add another 100,000, right? They can have 200,000 of ADB. Now, I don't know if you know, but if they have 200,000 whole life or more, they can actually have 300,000 of ADB, right? So you can add little things like that, even if they're not doing anything else. Okay, you can at least get that as like a last resort. Okay, so that's why it's important to have product knowledge, so you know what you're allowed to add and you know, what kind of products they have. Okay, so let's talk about on the phone, how to get them set. Okay, number one is to give them a reason to want to review their policy. The way my phone presentation starts is I say, hello, may I speak to Joe? That's what I always say, hi, may I speak to Joe, or hi, may I speak to whoever. I never assume it's a certain person, because what if the wife has a deep voice, right? That's kind of embarrassing. Like, hey, Joe. She's like, no, this is Mary. I'm like, oh, God. Can you put Joe on the phone quickly? Thank you. But I always say, hi, is this Joe? Hey, or hi, may I speak to Joe? Hey, Joe, it's James with American Income. It's your life insurance company. How you doing? These are the only people that I ask how you're doing, right? Because they already have a relationship with us. So they don't think we're a scam straight from the start, right? So I have I quickly ask them, so how you doing? Okay, great. Well, hey, the reason I'm calling is because it's time to schedule a review on your policy. So this way you can find out how much money, where your money is going, how much cash value that you have, and also to update your claim forms. And then I quickly ask them, so do you remember that freedom of choice certificate? So when we do that, they're already like, even if they say yes, they remember it, they're usually full of shit. All right. It's 9 times out of 10 or 99 times out of 100. They don't really remember what the freedom of choice certificate is. Okay. Then you quickly explain to them, okay, well, no problem. Don't feel bad. A lot of people forget about that, but that's the most important document that you have, because that's the one that takes care of your final expenses for your family. So what I need to do, okay, is show you how to put your policy number on the back of that, update your claim forms, organize your folder, blah, 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 blah. I'm sure y'all have the phone script, right? Does this sound similar to the one you have? Gio, do you have them using the one that I push?
Very simple, yeah.
Very
Basically the
similar.
same.
Okay, all right, perfect. So by asking them if they remember the freedom of choice, it makes them feel like they don't know something important about their policy, which gives another reason to want to review it. Never tell them what their coverage is over the phone. If they ask you what they have, you can say, you know what, that's something that gets printed out once we schedule the appointment. So I'll be able to tell you all that during the appointment. So you always want to push it off to, you know, the appointment, not something you can gonna go over on the phone. Okay. Your attitude is, so here's what we're gonna do. It's not, can we do this? Okay. Your attitude is, here's what we need to do. Right. So you're leading them, right? Like if you're coaching a team and you're down 10 points at halftime, you bring them in for a locker room talk. Are you going to say, Gio, do you think you can shoot the ball a little more? And Vince, do you think you can make some more blocks or get some more rebounds? No, you're going to say, all right, Vince, what I need you to do is get under there, get in the zone, and I don't even know the terms, but get in the zone and get more rebounds, okay? Focus on rebounds, okay? Focus on assisting. Your shot's not on tonight. Gio, your shot is on. I need you shooting more tonight, right? So that is your mindset. You're the coach. You're not like there to talk to a small child, okay? Do you think we can maybe pick up your toys right now? No, it's like, here's what we're going to do. We're going to pick up your damn toys. You're going to get spanked, okay? So anyway, your attitude is more like a coach, not like their best friend, okay? Always on the phone. Here's a few rules I have. When you're going to set the appointment and pick a time, I never ask them what their schedule's like. If you ask them what their schedule's like, they're always the busiest people in the world. And guess what? There's nobody more busy than you, okay? So always give them 2 times that work for your schedule first. So I'm always going to pick 2 times regardless. I'm not even going to ask them what their schedule's like. Okay. I'm just going to tell them 2 times that I have available, and I'm going to say which one works best for you. Now, if they say that those times don't work, then I'm going to ask them, all right, well, what time do you and your wife normally get home together? Then you find out what time they're home together. Then you give them 2 times that work for their schedule. I've done this a million different ways, and I'm telling you, this is the best way.
I agree 100%, Keith. I agree 100%. If I could even just role play that, I would say something like this. You know, say, and Joe, right now I have a really booked up schedule. right? But I actually have a little bit of time on this time, or I have this time. What time works best for you, right? You don't even ask them what they got available.
Bingo. And then the second step is if they say those times don't work, then you find out what time they're available. Okay.
Mhm.
We used to do this thing where we say, now you still working first shift? I don't do that anymore because I don't want to find out when they're working, because if you find out when they're working, all you're really doing is finding out when they're not home, right? I'd rather go straight to finding out when they are home. So I'm never going to ask which shift are you working, because the answer to that question tells me when they're not home, right? And then I'm just assuming they're home after that, right? But really, I want to find out, okay, what time do you, I'm going to go straight for the answer I want. So what time do you and your spouse normally get home together? About 4 o'clock? Okay, perfect. I can squeeze you in on Tuesday between 5 and 6 or Wednesday between 7 and 8. Which one works best for you and your spouse? It's always which one works best. And that's with setting any appointment, all right? And then make sure you solidify. Do you guys get them on Zoom when you set the appointment? Yes, no?
We try to.
If it's a call night, no. But if I'm doing same days, yeah.
Okay, gotcha. Yeah, it might seem like it takes a little bit longer, but if you can get them to actually click into Zoom and wave at them and say hi when you set the appointment, now they already know how to use Zoom. They already know the procedure, and it's just a little bit easier when it comes time to actually have the appointment. All right, so in the house. Now we're moving to in the house. So my structure for presentations is going to be the same no matter what lead I'm working. Okay, but they're going to be small variations. So the structure, the overall structure, which I want to go over first, number one is rapport. So we start with rapport. This is breaking down barriers, breaking down walls, right? Number two, the second step, I want to make sure, and this is like a psychological kind of thing that I'm going over here, okay? First is the rapport. Second is to become the expert. Okay, and what I mean by that is you're proving your knowledge to them. And the easiest way to prove your knowledge to them is to explain the difference between whole life and term. So I have a drawing for that. It's on my website, thekeyforsuccess.com. And it's perfect. I use it in every house, okay? So during that process, I'm becoming the expert. The third step is to create a problem. You always want to create a problem, because our life insurance is a solution to their problems that they're not aware of yet. Or maybe they've thought about it in passing, but they never really truly had a deep thought about what would happen to my family financially if I died today. Okay, so during the problem creating phase, that's what we're doing. We're getting them to think about how their family would be financially if they died today. The fourth step is to present the solution. Because once you've brought up a problem to them, then they need to be able to see the solution right after that. Now that they see the solution to their problem, they really want that solution, because humans are problem solvers. They want to be able to solve whatever problem is put in front of them. So the fifth step has got to be the takeaway, because people want what they can't have. And if they really wanted this solution to their problem, and now you're saying you don't even know if they can get it, they want it even more. And then after that, the final step is always asking for the check. So that's like the overall. You couldn't mix them up. You couldn't say like, let's wait to the end to build rapport and ask for the check first. Okay, another one that people don't always see as a problem is swapping the solution and the problem. That's a huge problem. If I was to run into the office right now, okay, and try to sell you guys an air pump, and I'm explaining all the details about this air pump. You know, it's got a bright shiny nozzle. Okay, it's brand new, only slightly used. $25, Gio. You want the air pump? He's like, nah, bro, I don't need an air pump. So I strike out. I don't sell my air pump. But let's say that the next day, I show up a little bit later, and I go ahead and let all the air out of Gio's tires. And I know he's got to get home, so I just point out to them, Gio, what happened, bro? Your car, your tires are all flat. I don't know what happened yesterday. You didn't want this air pump, but guess what? I got that same air pump today. It's $50. You want to buy it? Right. So now he sees the problem solution. Okay. But guess what? Because he already said no yesterday, he's still going to feel a certain kind of way because now I'm trying to sell this air pump again. He knows he needs it, but he already said no once. That's why you don't want to bring up the problem after the solution. Because if you try to sell the freedom of choice on how great it is, they're like, nah, I don't need it. Then you say, well, wait, let me show you why you need it. Because if you die, your family's going to need this, that, and the other thing, right? They've already said no, so it's going to be even harder, even if you do show them the problem for that solution again. So you always want to do the problem first. And then when you're presenting the solution, like you don't even have to sell it to them. You don't even need to tell them that they need it, because they're going to kind of like see that and think, hey, that's the solution to my problem. I'm going to get that. And then when you try to sell it to them, they already think it's their idea. Okay, they already think it's their idea, like they thought of it, because they saw the problem you presented. Immediately afterwards, you presented a solution to that problem. Okay, and then you try to sell it to them, they're going to get it. Okay, it's way more likely they're going to get it. So always problem before solution.
Hey, make sure we dress professional when we're meeting with POS. You can wear a suit and tie. You put your financial advisor hat on. This is where, like, if you hired financial advisors to work for you, they would be the best at running POS. They would be the best at it.
The only exception to the dress code is if you have an X-Man shirt like this, you can wear that. Only because that's me in the middle.
Talk about that.
Yeah, dude, you remember that hat?
Yeah,
I was
that's
with
great.
Tommy when I got this hat.
Top Golf went to Heinz Field, and they let you hit golf balls in Heinz Field.
Yeah,
So,
imagine launching off golf balls in Heinz Field. It was pretty sick.
What?
I remember that.
Yeah. Okay, so when you're in the house, okay, remember that structure. You should always have those 6 bullet points, even if you got to like tape it to your laptop screen as you're going through your presentation. It almost doesn't matter what presentation you do, as long as you hit on those 6 bullet points and you make sure you're getting them like psychologically invested into those. All right. Then it almost doesn't matter what your presentation is, because it'll work as long as you do those. But when you're in the house, do not tell them what they have in the very beginning. Okay. The client wants to know what they have, right? So they might ask you straight away during the rapport. So what is this all about? What do I have? Can you just tell me what kind of coverage I have? I always tell them, you know what, there's actually going to be a quiz here in about 5 minutes, and that's the answer to the quiz. So I can't give you the answer to the quiz yet, but we're going to go over it here in a couple of minutes. So that's a really good way of getting out of telling them what they have right away, because you don't want to tell them what they have right away. If you tell them what they have right away, they found out what they wanted to know. Now they're not paying attention, right? You want to keep them on the edge of their seat. So you tell them there's going to be a quiz here, and you can't give them the answer to the quiz. All right. Again, if you know they've been reviewed recently, do not ask them what the last agent did. Never ask what the last agent did, because all you're doing when you say that is you're finding out what you can skip. Okay. If you ask them, what did the last agent show you? And they're like, oh yeah, they did the child safe kits. They did blah, blah, blah. Now you're going to skip the child safe kits. Now you're not going to get the referrals that you should have gotten. Okay. Last agent probably collected referrals and never worked any of them. Okay. So get it out of your head that anyone else was ever there. Okay. Also hold off on the freedom of choice and talking about their coverage up front. Educate, quiz, and then tell what they have. I already talked about that. So educate, quiz. Whenever you're presenting, I never like to ask the client questions that they shouldn't really know the answer to yet. So I'm only going to ask the client questions to confirm that they learned the thing that I taught to them. So what I mean by that is when you educate them and then quiz them, it's not like if you show up to class, like when you showed up to class, did Gio give you a whole list of, like, did he throw a pop quiz the first day? Probably not, right? Because he didn't teach you anything yet. Okay, your teacher is going to teach you something and then a few days later hit you with a pop quiz just to verify that you learned the thing that they taught you. So that's what we want to do as well. I'm never going to ask them, so do you understand the difference between whole life and term? Before I explain it to them? No way. I don't want them to try to act like they know the difference. Okay, because what if they say, yeah, I know all that. What am I going to do now? Am I still going to show it to them? It's sort of disrespectful, right? If you ask them, hey, do you know the difference between whole life and term? And they say, yeah, I know all that already. Well, yeah, let me show you anyway. Like that, you don't want to set yourself up to do that. Just go straight in to explaining the difference between whole life and term. Never ask them if they know the difference first. Always just go straight into it. Because they might already know it, but they don't know it the way that I want them to know it. Find out how they got American income in the first place. Find out how they got American income because they might have been referred in by somebody. Now you can ask them, oh, who referred you in? And then get their referrer as a referral. So you're kind of going backwards with it now. So they were referred in, but now they're going to refer the people that referred them back to you. So you can get them as a lead now too. So talk about it. Maybe they got it just straight through their union. That helps with rapport. Oh, you got it through the steel workers? Awesome. I work with a lot of steel workers. Do you know Bobby Smith? He's your neighbor, just a couple blocks down the road. Okay, talk about other people in the area that you've met with, okay, or maybe other people that are on your schedule. Always look at your schedule and see who you got coming up next. If they're in the same area, maybe they know each other. If they're in the same union, maybe they know each other. Talk about them, okay? Name drop. Name dropping is huge. Okay, even if the people don't know the people that you're talking about, at least they can feel like they were part of something that other people are doing, okay? I don't want to get too much into term conversions. It's going to take too long. Gio can go over that for you guys some other time. But a good line to use before to get referrals. You got to think about the client's mindset. The mindset is you're there to talk about life insurance. So if you go into like collecting referrals right away, they're going to be a little bit irritated. And they're going to wonder, why are you asking all this? I thought you were here to review my policy. So you always want to preface that by saying, before I review your policy, I have something very important that I must go over first. Always say that. Always preface it with, before I review your policy, I have something very important that I must go over first. So now they know that, yeah, you are going to review their policy, but you have something very important that you got to do first. So now they'll be a little bit more accepting of whatever it is you got to go over first. All right, so when it gets to educating them about life insurance, so after collecting referrals and you're educating them on the different types of life insurance, I always go over the whole life versus term drawing. And then I ask them, so which type do you think you have? Once I've explained the two different types, I'll explain. So I'll ask, so which type do you think you have? Now, if they're like, well, I don't know what I have, then I said, well, which type do you hope you have? And they usually say whole life, which is perfect for term conversions because you just made them love whole life and wish that their whole policy was whole life. And you're going to tell them, okay, well, there's no wrong answer because you have a little bit of both. So you have a really good program. Okay. This is all term conversion stuff that Gio can talk about later, but it sets you up for that, right? And then at that point, you can tell them what they have. You can start breaking down exactly what they have. So this is where you got to be able to read a POS summary. Okay, and all the codes, there's a million different codes, but the easiest thing to know is that if it says WL in the code, then it's whole life. All right, if it says ADB, that's accidental death benefit. One that was confusing for me at first is when it says term ill. Term ill is not a term policy, it's just the terminal illness rider. And that's probably for another workshop, because there's a ton of different codes that you can know. I'm not going to go over all that right now. So basically, right after you start educating them about what they have, I'm going to start showing them why they probably got it. So let's say they have 10,000 a whole life and some ADB and some other stuff, right? So I'll say, now, Joe, this 10,000 a whole life, you probably got that for your funeral and final expenses, right? So even if they forgot why they got it, that will kind of remind them why they got it. You're pretty much telling them why they got it. Say, okay, so how much would you estimate it costs for final expenses today? So always hit them with that. And then no matter what they say, I say, okay, that's pretty close. It's somewhere between about 10 to 15,000. So they could tell me that funerals cost $3,000. I'd be like, yeah, it's pretty close. They're between about 10 to 15,000. Okay. So I always hit them with that. Now, I've been saying 10 to 15,000 for the last 10 years. So I'm sure inflation probably increased that now. It's probably 15 to 20. So if you want to use 15 to 20, you can use 15 to 20, but I still use 10 to 15. All right. So I'll hit them with, they're about between about $10 to $15,000 right now. Then this is where I get into talking about inflation. But first I go backwards. So I'll say, Joe, so what do you think that would have cost about 20 years ago? Because think about it, these people were probably alive 20 years ago. They might remember, maybe they've buried somebody. So whatever they say, they could be totally off. Again, you can say, yeah, it's pretty close. They're between about 5 to 7,000. So over these 20 years, what happened? Okay, it's obvious, so I can ask them that, right? I always draw it out, and I might type it out if it's virtual. But I'll have 10 to 15,000 here, and then to the left of that, I'll have 5 to 7,000. Then I'll say, so what happened between here and here? They'll say, oh, it went up or it doubled. I'm like, yeah, you're exactly right. Now, Joe, because of the annual inflation rate being between about 3.7 to 3.9% annually, that means that because of the rule of 72, every 20 years, the cost of things double. Okay. So I'm sure you can remember 20 years ago, the cost of bread and milk and everything else was about half of what it is now, right? Same thing happened with funeral and final expenses. Now you're about 40 years old, right, Joe? So I'll put 40 above the 10 to 15. Then I'll say, well, 20 years from now, since things double every 20 years, what do you think it's going to cost 20 years from now? See, I set them up to give me the answer that they can't possibly get wrong unless they're a total idiot. Okay. I'm telling them it doubles every 20 years. I showed them it's 10 to 15,000 right now. So what do you think it'll be 20 years from now? And they'll usually say 20 to 30. I'm like, okay, you'll be in your 60s at that point. Let's go 20 more years. You got to at least make it to your 80, right? Into your 80s. So then what do you think it'll be then? Okay, 40 to 60. And then I circle that and I show them, so this is what you actually need for final expenses, somewhere between 40 and 60. And you did a great job by getting your foot in the door with the 10,000 that you have right now, because it's the right type. Okay. However, there is a gap between what you have and what's needed. Okay. And that's something you'd have to qualify for. But let me show you this next part, which is the needs analysis. So you see how I did all that? I went back 20 years and then I went up 20 years until I show them like what the inflation, what it would actually cost for them when they're in their 80s. And I showed them that's what's needed. You got your foot in the door with this. There is a gap between what you have and what's needed. However, that is something you'd have to qualify for in order to fix that problem. Like I'll even say that in order to fix that problem, that's something you'd have to qualify for. But let me show you the needs analysis. That's the perfect transition to get back off the paper, back into the laptop presentation. So that's how you do it. That nonchalant little takeaway of that's what's needed, but that's something you have to qualify for. Okay, that's the mindset, just a small little takeaway. It's not your huge big takeaway with a power phrase at the end like we're going to do. Okay, but it's just your nonchalant takeaway to get back off that drawing, back into the needs analysis. Okay, so that's one of the biggest ways to be successful on policyholders, is increasing them on their freedom of choice. Now, what if they already have 100,000 of coverage? Okay, well, like I said before, nobody's ever called us up and said we sent them too much money when they made their claim. So we can always spend that. Okay, that 100,000. Now, Joe, you probably got that 100,000 in order to pay for the house or to cover your income in the event that you die. Okay, so you basically spend that on other problems, because there's multiple problems they have. They have final expenses as a problem. They have income protection. They have mortgage protection, college education, all sorts of different things, all sorts of debts that they might have. So you basically take whatever amount of coverage they have and show them that it's still not enough. All right, you can do that. You could also show them how to maximize things by doubling their coverage in order to shorten the period of time they're going to pay for the policy. So that's another workshop that we could do based on paid up options and cash value and things like that. Because if they have, let's say they have 50,000 of coverage right now, okay, and that's what they need. Maybe they're in their 40s and they need 50,000 for their final expense coverage when they're in their 80s. Well, if you're anything like Joe, if you're anything like me, you probably don't want to have to pay something for the rest of your life unless you really had to, right? Right. Well, let me show you how you can actually maximize your policy and shorten the amount of time you have to pay for it, so you don't have to pay for the rest of your life. Okay, and then I basically go into showing them how by doubling their coverage, not only will you be covered for twice as much if you die anytime soon, but guess what? You only have to pay for 15 years instead of 40 years. Okay, that way you'll have 100,000 for now, and then once that reaches a paid up value of 50,000 combined, you just stop paying for it. Now you have your 50. Plus, you have the option of keeping it if you can afford it and you still want to keep that amount of coverage. Okay, so there's all different things you can do. That, I mean, I didn't really go into detail about how to do that for you guys, but Gio, you know how to do that. You could show them. I'm pushing everything off on Gio.
Keefer, I had a question real quick for you.
Yeah.
For the funerals, I remember seeing on a recording of you months ago back at Aries, you said, never use the word funeral. You always use final expenses. Can you go over that real quick for kind of everyone here?
Yeah, definitely. So, so I use the term final expenses because that encompasses everything surrounding someone's death. It's not just an earth burial. It's not just a cremation. Okay. Because they might say, well, I'm going to get cremated. So usually I like to proactively handle that when I'm talking about final expenses. And I'll say, now, Joe, what would you say the average cost of final expenses are? And Joe, what I mean by final expenses is all the costs surrounding the average cost surrounding anyone's death. Okay. That could be medical expenses, earth burial, cremation, doesn't matter what it is. Okay. Final expenses actually is an average number of all those things, regardless of which direction they go. Regardless of whether you're having an earth burial or a cremation, final expenses could include medical bills, any other outstanding debts that would occur upon someone's death. So that's why I use the term final expenses rather than funeral. So that way, if they say, well, I'm not having a funeral, I'm going to be cremated, I'll say, well, Joe, the final expenses, that average number actually includes cremations or earth burials. That's why it's a range of 10 to 15,000. Okay, so if you're going a little cheaper, the cremation plus possible medical expenses, and because we don't know how you're going to die. Okay, if we were super lucky and we knew exactly how we were going to die, we could probably avoid it, right? But unfortunately, we don't have that magic 8 ball. So there could be medical expenses. There could be many different things surrounding someone's death. So anyway, I'm getting super into it, but that's why I use final expenses instead of funeral cost or cremation or whatever. The main thing to do though, when you're selling life insurance, is to find out who and what is most important to them. Find out who and what is most important to them. If you're sitting with somebody who can't tell you straight away that their family is the most important thing in their life, then I want you to pack your shit up and leave that presentation, because you're wasting your time. If they can't tell you that their family is the most important thing in their life, if they can't tell you who would be financially affected by their death, then they're not going to see a reason for life insurance unless you really have a deep conversation with them and get them to realize things they don't see right in front of them. Okay. Some people literally don't have anybody who would be affected by their death financially. Okay. But they still have a financial responsibility to at least take care of their final expenses. So if we can at least get them to see that they have a responsibility, and I never point my finger straight at them. When I'm going over the top reasons for life insurance, I'll say, Joe, the number one reason for people purchase life insurance, number one is to take care of their final expenses. And number two is for income protection. So final expenses, Joe, that's something that we all are responsible for. So Joe, when I die, I need to make sure my final expenses don't fall on anybody else. Okay. And Joe, when you die, the same thing. We need to make sure that our final expenses don't fall on somebody else. So as a minimum, that is our responsibility. So I'll have that conversation where it's like, we all have that responsibility. When I die, it's my responsibility. And Joe, when you die, it's yours as well. So I'm never just going to point at them and be like, Joe, you need to do this because it's your responsibility for that. Right. Always put it on yourself and we first, then point at them, and then bring us all back into it again after that. It's just a psychological thing to make them feel like you're not just singling them out, but also people want to do what everyone else is doing too. If everyone else is taking care of this and they haven't done it yet, like I literally made a sale one time by like telling a guy who wasn't buying, like this guy he was a single guy. I'm like, Joe, it's just, extremely rare to find somebody who hasn't taken care of these problems yet. Okay. It's extremely rare. I just remember using that term, like it's extremely rare to find someone who hasn't gotten their life insurance squared away yet. Okay. And then he asked my trainee, he's like, really, is that true? My trainee was like, yeah, it's really, really strange. Like we just said, it was extremely rare and strange. And he was like, all right, well, what's your minimum plan? So I just gave him like, I don't know, like a $30 plan or whatever. But I was able to use that, and he bought because he felt like he was the only one not doing it, right? But it is extremely odd to not have life insurance, in my opinion. Like, how would you be so selfish, honestly? Like, you gotta, even as a kid, like I wanted my family to, like I wanted to win the lottery so I could like ball out with my family, Like I always thought, like if I had $1 million, I'd buy my mom this, I'd buy my dad this, I'd buy my brother this, I'd buy my sister a pony. Like we all should have something like that inside of us, to where we want our family to like be taken care of. Right. So that's the psychological side of life insurance. You got to find out who and what is most important to them. If you can't find out who and what is most important to them, then it's going to be very hard. And you can talk about that. Like you can use their used names. Like if it's like if someone came to sell me life insurance, they used Liliana and Dominic, they used my kids' names, like that would be really powerful. Now don't go over the top with it to where they can like see what you're doing. Okay. But drop it in real slick and casual, That's kind of like the more, you got to have some swagger when you're doing this. You can't come off like a sleazy salesman, okay? But find out what's important to them, find out their names, okay, and make sure you keep it straight. Also be transparent when you're adding coverage. When you're going over the options, a lot of times people think that the numbers you're showing, they'll think that that's their total. Because remember, when you're adding to policyholders, they tend to think about their program as a whole. They don't always think about that you're adding to it. So when you're showing the numbers, a lot of times they'll say, now is this total or is this in addition to what we have? Always be super transparent. I'll say, yes, this is going to be $90 in addition to the 120 that you're already setting aside. Because if you don't go over it straightforward right there, like you're going to have to do it at some point. So why not just be super straightforward? Okay. That this is going to be $90 a month in addition to what you're already setting aside. Okay. So which one do you choose to protect your family properly? That's how I ask at the end of my ABC. I'll say, Joe, so knowing that when you die, your family is going to need to have money to take care of your mortgage, replace your income, and take care of your final expenses. Which option do you choose to protect your family properly? Because they might be protecting their family, but they are probably not protecting them properly yet. Not until me or Gio is there. And guess what? If you show up a month later, they're all of a sudden not covered properly again. Okay, it's your job to up them again. But listen, find out, like I said, find out what's important to them, who's important to them, and then you got to develop avenues that you're going to take to show them the gaps. Like there's always gaps. There's always gaps somewhere. There's always something that's not covered, and you can use that to increase them and to up their coverage. But I feel like this was not 100% a POS workshop, but more like a, in general selling workshop. So real quick, I think we got like 2 or 3 minutes. If you guys have any specific POS questions that you want to find out now, you can ask me. So I'll open it up to some Q&A now.
Keith, if you are making a phone call to a POS who only has term coverage, obviously you're not going to mention cash value on the phone, right?
I do the same thing no matter what.
Really?
Okay.
Okay.
Well, guess what? If you want to find out how much cash value you have, guess what? You have 0. Right. So I mean, it's not a lie. It's not, it's still like, it still applies, right?
Yeah. Yeah. That's awesome.
Guess what? You have 0. We got to get you some.
Love it.
Yeah. So that's a good question, because a lot of times a new agent will try to like change things, or like feel like they're not able to do it the same way. I just try to keep everything the same. And then once I do the actual presentation, everything's the same all up until I say, so which type do you think you have? And then I start going over the coverage, and then things start going in different directions there. But everything's always going to stay the same up to that point. Because like, imagine if you had a routine where you would wake up at 6 o'clock every morning. Your alarm clock was on the left side of your bed. Okay, every morning you knew to just boom, go over to your left side, turn off the alarm clock, right? Well, what if someone moves it to the right side? Okay, now your alarm goes off, you're trying to turn it off on the left side, and wait, where's it at? Okay, you get confused. And then probably the rest of your day is mixed up. Okay, just something like that can throw you off. If you're changing the way you do things and changing the order of things constantly, then you're never going to be smooth with your presentation. I'm a little bit nerdy. I love to play video games. Like even since I was a little kid and we got a Nintendo, I was the youngest, so I always got screwed out of video game time. But I would wake up at like 3 in the morning and go down and play Nintendo when everyone else was sleeping. Okay, but now that I'm an adult and I've like built up some renewals, I can take a little time off and do the things I like to do. So I do something called speed running, which is where you actually attempt to finish a game as quickly as possible. And there's a specific order that you have to do things. Otherwise it all gets screwed up and you waste a ton of time. So just like in speed running, I got to do things in a certain order. And if I try to change it around, it happens all the time. I'll die and the run is over and I just wasted all my time. I got to restart. Okay. So just like that. And with presentations, try to do things in the exact same order every time. That's why I give you a bullet point list of those 6 things. As long as you are going over those 6 things and hitting on those, then as long as it stays in that order, it's going to work out. Okay. Any other questions?
Thank you.
Yeah,
so much.
Keefer,
Yo.
can you hear me?
Yeah, man.
All right. They used to give you the controller not plugged in all the time, huh? You got to play with
Yeah,
that
dude.
one.
Or they would like try to tickle me or punch me while, you know.
Hey, it happened to me too. But anyways, quick question about the POS. Some of our POS haven't been seen in 20, 30 years. You know, they got their foot in the door, you know, $17, less than $30 a month. Obviously, you know, they're 50, 60 years old now. It's a lot more expensive. What are just some tips that maybe you go at angle wise? And then on top of that, one more question is like, we do have a lot of POS out here that are just A&H. You know, just, and they've been seen like 20, 30 years ago and got it, and or those, you know, IG plans. So like, just any tips on that real quick.
Okay, so I can already tell your mindset is they're used to paying $4 a month. They're used to paying $20 a month. How am I going to get them another 100? Okay. Well, guess what? It's much easier when they're at least paying something. Okay. You know, they got trust in the company. You got to just erase that. I could tell you got the wrong mindset going into it. And that's probably what's holding you back is you're thinking like, they're like barely a client right now. They're barely paying anything. You know, they're thinking it. So you got to get them to think bigger. All right. By comparing it to things. And before I set up my ABC, I do what's called price conditioning. And I heard Gio talk about this. So I know that if you're around Gio, he probably would have told you about price conditioning. Is you're conditioning the client to think a little bit bigger and to kind of tell them what's normal. I'll say now, Joe, most people in your situation are setting aside between about $90 to $180 per month in order to protect their family properly. Just that line alone can help condition their mind to think a little bit bigger. Compare it to their cell phones. Before I do the line I just gave you, I'll give them this line. I'll say, now, Joe, I see you got a cell phone there. Okay. Or if they don't have cell phones, you know, maybe say, you know, you have cable TV, right? Okay. Whatever they have, right? So about how much do you pay each month for your cell phone? Okay. Then no matter what they say, you say, okay, that's not too bad. We found out that some people are paying more for their cell phones than what they're setting aside to protect their family. And that's a little bit backwards, right? The verbiage is key. The verbiage is key. So what I say is we found out that some people are paying more for their cell phones than what they're setting aside to protect their family. Now, how could you screw this up? You could say, we found out that most people are paying more for their cell phones than they're paying to protect their family. That would be the wrong verbiage. You don't want to say most people are doing this. You want to say that just some people. We found out that some people are paying more for their cell phone. Anytime it's a cell phone, cable bill, or whatever, they're paying it. If it's their life insurance, they're setting it aside. Okay. Or if it's another company and if it's their life insurance, then they're paying it, right? When it's our company and they're paying their life insurance, they're not paying it, they're setting it aside, right? So we want to say that, Joe, we found out that some people are actually paying more for their cell phones than what they're setting aside to protect their family. And that's a little bit backwards, right? They're always going to say right. They're always going to agree with you when they say that. And guess what? They're paying more than $4 or $15 a month for their cell phone. So you want to just condition them and compare it to things that they're paying for that aren't as important as protecting their family. And when you show them they have a problem, and here's what you got to set aside for the solution, they're not going to be thinking, well, I was only paying $4 a month. Now I got to pay 100 for it. Like, no, they're thinking, here's the solution to my problem. This is what it, you know, everything has a cost. Okay. To be successful, there's a cost. Okay. To protect your family, there's a cost. Okay. Fortunately, when you do it with life insurance, you're setting your money aside. You ain't paying anything. hopefully that helps. And it's your mindset that's the problem. It's not the leads. Just being honest.
No, I've had my.
Ben set us up first.
Yeah, contrary. What's yours?
Gio,
Yes.
Gio, you raising your hand or what?
Yes, sir. I was trying to flex for you. What's your question?
No tie Gio.
I wanted to ask you, it's based off Josh's, so I wanted to get it over with while you were on the topic. With the IG 20Rs and stuff like that, not really just like term or renewable and convertible, but it's like this old group term that's like 70 cents a month, $1.50 a month. A lot of POS just have that. Is that what that is, a group term? And if that is what it is, a lot of, I'm sure, you know, what we tend to run into is they don't even know they have anything. Don't even remember what it like. Oh, I don't have anything for you guys. Or like, have you experienced stuff that's that low on setting it for the phone call? And if you have, like, what do you recommend?
Well, I would say number one, you have the proof in front of you that they do have something. Okay. So I would say, okay, well, let me just verify, make sure I can talk to the right person here. Your name is so-and-so, right? Okay. And your date of birth you had listed on your policy here is this. See how I throw that in the date of birth you listed on your policy. I'm not saying we have your date of birth as this. I'm making them feel like they did something already and they caused this to happen. Okay. So we'll do that. And then I'll say, well, surprise, surprise, you actually do have some coverage. And don't feel bad, Joe. There's actually a lot of the members of your group, or a lot of, whatever it is, like if maybe it's like a lot of people who work for that company or whatever, maybe you can find out like what company was really common to have those. Cause my dad actually had one of those policies. It was a group. It was actually not an ADB. It was a group life insurance policy that had a certificate, just like the ADB or the AD&D certificates. We found it in his paperwork after he died, and it wasn't active anymore, but it was through a company he worked at. They had all their members covered by this like $1,000 life insurance policy from American Income. Okay, it wasn't AD&D. But what happens is once they leave that group, or once that group disbands, or they're not going to have that relationship with American Income anymore, they're able to take over that policy on their own, and it becomes an individual policy. So the group policy turned into an individual. I think that's what IG means, like individual group. But anyway, usually it's AD&D. Usually it's accidental only. But yeah, I pretty much just verify date of birth, their name and all that, and say, well, surprise, surprise, don't feel bad. I found several other people who had this policy as well that didn't remember, but it's probably because you're paying only $10 a year. Okay. You're paying only, $15 a year. That's probably why you forgot about it, but it is super important. And then, going to setting the appointment like I normally would.
Keith, could I just mention something? It's just think about the
Yeah.
problem that you just encountered there, is that you encountered someone that has life insurance and they don't even know that they have it. Think about that. That's why you're calling them, is because so many members, they have coverage, they don't even know that they have it. And then if they would pass away, there's literally money that their family should be receiving that they're not getting right now. And that's why they have me giving you a call to make sure that doesn't happen to you and your family. You feel me?
That's way better than what I just said.
Thanks, bro.
Yep, no
Appreciate it.
problem.
Man.
Blake's got one more.
So, POS meeting generated from a discount card lead, right? So I ran into this the other day. I called home office to get policy information, so I go over that with them. And I guess something changed recently where they actually need consent from the policyholder in order for them to disclose the loan value with me, because it's routed to a different SGA office.
Yeah. It used to be where they just needed to make sure you had an appointment set.
Yeah,
That's-
I ran into it for the first time the other day.
Yeah, I mean, that's pretty rare. So if that happens, just, tell Gio, maybe he can get Tommy to get it approved or whatever. But yeah, pretty rare thing.
Okay.
All right, are we good?
Question.
Here, you got one more?
Last question, brother. Hey,
All
I
right.
appreciate your time, appreciate everything you've given me. I don't know if you guys know this, but Keefer taught me a lot in this business, and a lot of stuff he says is so funny.
It's the same stuff we do, man. So I appreciate you.
I feel like I'm just repeating what Gio says though.
But yeah, I wanted to ask one of two questions. Basically, one, what percentage are you still in person? Or are you doing virtual? And I know you're very systematic on keeping things exactly the same because the fundamentals of sales, it's not like they're different if you're doing virtual or in person. But any tips if you are going virtual on what you've done a little bit differently, or maybe to help, or did you just keep everything the same?
I pretty much keep everything the same. The only thing that's different is how am I going to show them things that I was writing down, okay, now that I have to type it out. So, I mean, you could get yourself like a tablet that you can actually write on. I have one right here, but I actually lost the, let's see, hold on. You can get something like this that you can actually use a little pen and then open up paint or something and like draw on it with a pen. If you really need to write things down, that's a good way to do it. But otherwise, I just, since I can't use this right now, I just use Microsoft Word. And if you have Windows and you don't have Microsoft Word, you could actually still use WordPad. So just use WordPad, pull it up, make sure you got your font really big, share your screen, and I just kind of type stuff out. So I'll show them the whole life versus term drawing. I'll share my screen with the drawing up and I'll explain the difference. And then I'll use like Word to type stuff out. And you got to be pretty quick with it. So you want to practice it before you actually start using that in a presentation, or you could literally just draw it on a piece of paper and hold it up to the screen if you want to. Yeah, I don't change things a lot. A good tip is wherever your camera is, when you're doing a power phrase, wherever your camera is on your screen. Okay, my camera is right here. All right. I'm going to take my, let's see if I can share my screen and show you what I'm doing. Nope, I can't share it. But anyway, I'm going to take my window with the video. I'm going to put their picture right below my camera.
That's what I do.
Yeah, so that I'm looking right at them.
Yep.
Right? So if your camera, most laptops have it at the very top in the middle. I'm going to put the window with their video on it right under that, so that when I'm looking at them, they can see me looking at them. I'm not like down here like, so Joe, what's the most important thing in your life? Right? I'm like, so Joe, I have a very serious question. What's the most important thing in your life? Just look dead into the camera, right? Okay, your family, very good answer. Go ahead and put a price on them. How much are they worth to you? You know, I don't want to be looking down here when I'm delivering that line. So that's a really good tip. Blake already picked up on it. Okay. So yeah, I mean, that's pretty much it. And solidify just like you normally do. Don't skip stuff. You know, don't skip things just because your presentation form is different.
Kiefer,
Yo.
I don't know if you know this or not. There's a whiteboard in Zoom that you can just draw on.
Oh, perfect.
If you share, when you go share your screen, the first thing that pops up on the top left is a whiteboard.
Awesome. There you go. You can use the whiteboard. Learn something new every day. All right, y'all. Any other questions?
You guys good?
Awesome.
Sir.
So
Thank you for your attention.
Do you wear that headset when you give a presentation?
Sometimes.
Yeah.
Yeah. Why not? Do I look nerdy?
Facebook card.
I was just wondering.
It's like a $300 headset. Hopefully it looks all right.
Maybe it's a way to add more control, you know?
Yeah.
Kind of feel like the pilot telling
Like
me
a commander.
Yeah. Like I said, I'm a nerdy gamer, so these are like it's a gamer headset. But you know, I got these little things too. We could use that a little more streamlined or whatever. Honestly, like I have so much control in my presentation just by, you know, my like the techniques I use and the things I say and my, you know, the verbiage and, you know, how I just have confidence, you know. So how I look isn't always the issue, but it is important to, you know, be professional, look professional. So I don't know if it's a good thing or a bad thing. People used to say, you drive $100,000 car out to your appointments, aren't they going to like judge you and think you're just trying to get their money? I'm like, okay, so if you're working with a financial advisor and he's driving some piece of shit and telling you what to do with your money, are you going to listen to him, or are you going to listen to the guy who's actually been successful and looks successful? Okay, I don't look at it as they're judging me and they're going to think I'm just trying to take their money, because I'm not. Okay, if you think you're just trying to take their money, then maybe that's your problem. That's not my problem, right? I don't have a problem with it. They see the car, they might say something. I'm like, yeah, you know, I work hard. That's why I'm out here on a Sunday coming to see you. So luckily, when you work hard, you know, you can, you know, afford a couple things like that. But anyway, I got kids now. They take all my money. Then you just move on to the next thing. So it's not a big deal.
Remember that AMG? You're the man, bro.
All right, y'all. Thank you
Hey,
for being on.
Hey, we got this recorded. I can send it to you, man, in case you ever want to use it.
All right, very good. Thank you guys for having me.
Thank you so much. And
Hopefully I can visit you soon.
Make sure you guys put your numbers in impact. Make sure you guys put your numbers in impact.
Do it.
That's the big announcement. Does anybody know the rule 72, what he was talking about?
Yeah.
Well, 72 is
Yeah.
compound interest.
Yeah, why did he say that though?
It's not rolling anymore.
Because everything comes up here.
Why?
I think you do 72 divided. I used to incorporate this in the pitch.
It's the every 7 years. It's every 7 years, your money's supposed to
Yeah,
be double. Or
That
it was-
does,
It was 10%.
10%, yeah.
10%.
72
Doesn't
divided
do
by
that
what
anymore.
So you take 72, we put it on the board, right, for us, or you don't got good handwriting. Mike got better handwriting than you.
Yeah.
No, then just look at Matt and look at Matt, just look at him, he got better handwriting. You can just tell, I can just tell. I can just tell. You got better handwriting than anybody in this room. Look at Matt and never look at us. Look at him and look at us. Please, you know what I'm saying? You got it. No, just look at him and look at us. He looks like a professor, man. He looks like. So you take 72 divided by whatever interest rate you're getting. No, just put interest rate. And that's gonna equal how many years it takes for your money to double.
Take a photo, everybody.
That's it. That's the rule of 72.
No longer roll anymore. Or the 10%.
No, it's still a rule.
The 10% one, the compounding interest.
That's good.
Yeah, that might be different.
That's like
This
that
is still a rule because this is just time which you can't change.
It's
this.
like a formula.
Yeah, it's just like, so all you do on this is you just take, so now if you get 10%, then your money would double every 7.2 years.
Yeah.
Every 7.2 years, right? But you could flip it and use inflation. So you take 72 divided by the inflation rate, and that tells you how many years it takes for not your money to double, the cost of things to double. You know, so take 72 divided by 3.5, and it's gonna be, I do 72 divided by 3.32, and it ends up being 22.6.
Yeah.
So.
So every 20 years,
I
things
was
double.
taught that on pitch, but I stopped doing that.
It was like your milk, your eggs, your bread, your gas,
Nice.
every 20 years, prices double.
I used to do that.
Milk, eggs, bread, gas, materials used to make you stable.
Jesus
No.
Christ.